Good afternoon. Ken at Tortoise Capital with a review of the weekend trading reports for September 21st, 2019. Market's still in bullish normal conditions. Overbought on an annual and a quarterly basis, but gave back some this week on monthly, weekly, and then the 3-day look back is significantly oversold. See the blended monthly rebalancing for September. Next reevaluation on or about 1 October. These are the leaders based on Friday's closing prices. You notice the prevalence of the defensive plays. So that's going to remain an important alternative for swing trading this upcoming week is real estate and then the precious metals, specifically silver wheaton and gold miners. Market mosaic, white bullish in the price stretch. Strength of trend is a neutral 16.3. The risk index at 1.173 is still in risk on, but it's rolling over, and so that is a caution for swing trades. That's part of the reason for the cashing out of the S&P swing over on Friday. It had become very extended and then at a 2-day low. ETF2 theoretical exposure at 80%. Looking at the weekly market health check, most of the price ladders to the downside. We're still holding support at the upper edge of the dragon, which, however, is flat and is on the north shore of the river, which is slightly trending upward along with the 90 and the 270. But this is a market that is running out of steam and starting to roll over. Seems like a natural place to be cautious. Monthly is a little better looking. The monthly is still up. It's got to get above 305 for an all-time high, but if it breaks out above 302, that's still going to be favorable. Support at the monthly low at 290. Middle of the dragon and the belly of the dragon. Belly of the dragon to me is the significant support level. That's like almost a 6-month low. The defensive plays you're going to see throughout the blended monthly rebalancing portfolios are doing very well. This is why I'm stalking IYR, the real estate, as the alternative play. But otherwise, treasuries, utilities, real estate all did well. Energy in China got smashed, along with commodities. In the Dow 30, Procter, Microsoft, Verizon, Merck all did pretty well this week. But it was a mixed bag among the leaders. And most of the laggards continued to lag. So there wasn't as much follow through on that buying quality on sale that we saw last week. Sector spiders, about a third on cash signals. Energy sector, metals and mining suffering. ETF Max. This looks at about 350 extremely liquid ETFs. The leaders generally did pretty well in the defensive plays, but otherwise kind of a mixed bag. Energy really got smacked hard. The U.S. is stronger than the rest of the world, so it's S&P over the globe. Inside the U.S., it's a tie among large caps and tech. With only 2 symbols on cash, that puts us at 80-20, down from 90-10. Energy continues to consistently lag. Really, it's the U.S. and real estate and some of the defensive plays, but the rest of the world is really lagging hard here. Home builders showing a little bit of new strength, XHB with the green and white, but otherwise dividend appreciation, minimum volatility sectors, the tech sector spider, and IT all in white and green. They were great, now are just good. Got to make sure you've preserved those profits. Could be stalking them for a resumption of the trend, however. Shifting to the daily, our exit in the swing that began back here in the bend of the river and the bend of the dragon, we cashed on Friday when it broke below Thursday's low to preserve the gains. There's a very good quiz and case study on that swing trade at Patreon, and it's well worth your study. Summer has moved into the vernal equinox here, so we're getting ready to roll into fall. EPP on an overreaction. Disney, McDonald's, Visa, Travelers, all looking interesting on the auto framer, and they were also channeling signals and have given back quite a bit on the 10-day and 1 month. So they could be buying quality on sale. In the ETFs, not much to choose from here. Strength has been in from Friday, carrying over maybe Mexico and Brazil. And silver at 16.8 has been really quite excellent. Pinch and stretch report. Still Microsoft and Travelers are offering opportunities on the pinch. For the auto framer, I'll be looking at Colgate, Costco, Devon for sure, and the energy sector broadly. On the daily squeeze, I'm looking at Walmart, Procter, Devon, the whole energy sector, really. I like gold in the spring, so that's going to drive me to frame Silver Wheaton and the gold miners. United Health also in pretty good shape. I'll be looking at Home Depot, Disney, and Intel on the basis of the overreaction shown in the index summary, and consumer discretionary as well. Slopestat is rolling over at a point almost one full SD above the long-term average. The last time it rolled over, here, and here, there were significant weaknesses. This one, not that much weakness. I mean, it resumed pretty quick, but that was really the first leg, and it's been getting weaker ever since. So this rollover, when it's not as high, this could be a pullback. Holding at the top of the river, but a pullback here to 285 would not be very surprising at all. The 30 already extended and the 90 rolling over, and the weakness in the 10. That downside is the path of least resistance. That's everything I want to cover. I'll be doing the swing trade 70 charts in 10 minutes for the subscribers and posting that link on Patreon as well. So until then, keep your risks measured and your powder dry.